as a group, commodities continue to be top performers this year, beating stocks, bonds, and global real estate. It's also lifted the performance of the USCF SummerHaven Dynamic Commodity Strategy ETF, no K1 fund, and that ticker is SDCI. So the fund has also garnered an impressive 5-star rating from Morningstar. And what has been driving SDCI's gains, and what type of investor might SDCI appeal to?
Since 2020, a couple things have been going on. One, there's just individual stories within commodity baskets, such as cocoa last year, that people don't think about cocoa. They think about crude oil and maybe coffee, but they don't think about, or copper, but they don't think about these smaller commodities. And there's a lot of supply demand individual stories there, and that drives commodities. But also as a whole, a couple other things. Inflation has been higher than it was in the past. And in addition to that, just some other, the U.S. dollar has also been a major factor. The dollar is generally got a negative correlation to commodities, because commodities priced in dollars, you can almost think of it as an exchange rate. It creates more demand for commodities priced in dollars when the dollar is lower. So that has aided commodities as well. And then there's a shortage of some things relative to need, and that continues to be the case. So that's driving commodities. In terms of who SDCI might appeal to, obviously, you have to look at it, whether it's suitable for your portfolio by yourself or with your financial advisor. But I think it's worth being everyone considering, at least for two reasons. One, it provides diversification from stocks and bonds, and people are really looking for that right now. We're getting more calls than we ever have because people are looking for an alternative to stocks and bonds, with stocks being so elevated and interest rates being where they are, and looking at 2022 when both stocks and bonds declined simultaneously. People recognize that maybe some other forms of diversification are beneficial. On top of that, commodities, people tend to look at commodities and think, oh, they're risky, they're very volatile. But they over the long term, a commodity basket tends to have risk about equal to stocks and bonds. To stocks. So it's not necessarily as risky as people think. Individual commodities, yes, just like an individual stock. Something happens to a company, something happens to a commodity, you can have big changes in the commodity price. But as a basket, we tend to see volatility that's comparable to stock indices over time.